What's up? What's up, YouTube? Back again for another analysis. And like I told you in the last video, I was waiting for a new consolidation. And here it is right here with a new consolidation line. Overall market is still bullish. Even though you may see a whole lot of red over here, overall market is still bullish. For the week, it's bullish. For the day, it's bullish. So I'm expecting this right here to eventually break through this extra hard resistance area right here. Consolidation near a fib line. That's going to be a solid resistance level. We'll see how long it remains that way. But for right now, yes, it's acting like a really strong resistance point. In the last video, I told you I was waiting for a bounce over here. It happened. It was really tiny. Luckily, when it did turn around, it bounced again. And then we got a little run right here that took us back up into like the 27.9 ranges. So this is an entry point right here. The first dip below the line in a bullish market is an entry point. This too is an entry point. Now I'm expecting this if it bounces. I don't expect it to go past this fib line, the 61.8. Right now, the 50% is acting as lightweight support, very lightweight support, especially considering it has extra strong resistance right above it. Currently can't even break back through the consolidation line. Okay. If we get enough volume, which it doesn't look like we are, we got like a little red volume down here right now, which isn't really too impressive for bears. So I'm expecting that to turn around, have it turn green maybe in the next candle or so. It's 10:53 a.m. California time right now. And like I said, I'm expecting it to break through here, maybe bounce off of here, then break through. And once it breaks through, we see already that it's had resistance about halfway in between the two fib points of 23.6 and 38.2. So since we have that resistance in the middle of there, you can expect that to be maintained unless we have a lot of volume. Let me put like a horizontal line there real quick at that resistance point. Let me give it a red color. So if it breaks through, I'm looking for it to stop right about here. If it doesn't stop here, it'll get caught at the next fib line and get reversed. Got a very strong reversal right here. The last time it touched the 23.6 fib line. Excuse me. So that's what I'm looking for right now. That's what I'm seeing. Doubt very seriously if this resistance turns into like a little bearish trend. I doubt that. Doesn't look like that's going to happen. Doesn't look like there's enough volume for it at this point. So I'm expecting in the next few minutes here, we got 5 more minutes before the next hour comes up. 9 times out of 10, you're going to see me on the hour candle on this chart. Even though I use the higher time frames to find out the overall direction of the trend, because we are usually going in one direction or the other. We're usually either bullish or bearish on the higher time frame. So look there to get the overall market direction. That way you know whether your entry point is below or above the consolidation line. In a bear market, you want it above. In a bull market, you want it below. You're expecting a reversal on this and on this. Should it be a bear market, you're looking for a reversal and a plummet through. Bull market, you're looking again, same thing, a reversal and a plummet through. So the entry point would be here. I would set one of the fib lines above as a target exit, knowing that that's where the big boys play. We've already seen them playing all over it. So these are your entry exit points while the fib line is up. Or I should say they're your exit points more so than entry. We're not really entering on fib lines, although this did hit a fib line. I said this is an entry point, so take that how you will. This was also an entry point, not on a fib line. So you just have to see what's going on your chart, recognize what it is, and then be decisive in your movement. Okay? It's like if you're going to pull the trigger, pull the trigger. Don't hesitate. Don't wait. Don't overthink it. Do what you know you're going to do. Stick with your plan. Whatever your plan is, however you planned it, don't deviate. Stay with it. Okay? Unless that plan is like constantly draining your account, then it's time to re-strategize. It's time to find a new plan. Or refine the plan that you're already using. Refine it, make it work. Sometimes it's possible, sometimes that's not. If it turns out that it's not possible, it's better to recognize that sooner versus later. Then toss that plan in the trash and find a new one. Once you get it, work it, refine it, stick with it, do not deviate from it, and you'll most likely wind up on the successful side of trading. The best way to do that is to lock and let ride. What do I mean by that? Lock in your profit and let it ride. So let's say, give you a quick example of that. Let's say your entry point, you saw the double tweezers, you knew it was going to reverse, and you said, well, you know what? I'm going to get in right at the fib line, right when it hits that fib line, that's where I'm getting in. Because I'm expecting it to go, continue to run, because I know we're in an overall bull market right now. So we get in on the fib line. And then for whatever reason, it takes off and, excuse me, time to eat. Sorry about that. It takes off again and it busts up above this fib line right here. Okay, when you entered here, your stop loss should be somewhere back down here. If it's a trailing stop loss, then that's all well and good. That's what I would suggest anyway, is a trailing stop loss. If you're not using a trailing stop and your stop loss is, let's say, right about here, and you entered at the fib line, and it jumps up 2 fib lines, move your stop loss to right here, bare minimum, to the next closest fib line to where the price went. Price just broke this fib line right here. So you'd move your stop loss from here to here. And what you just did was you locked in the profit. You entered on the red fib line. You locked in profit between the red and the green fib lines. Okay? That profit is locked in. So no matter what happens to the market now, you've got your profit. You've already made your money. Okay? You know you're in an overall bullish trend. You just hope that it continues to ride. If you have that trailing stop, it's following the market. So you don't have to worry about resetting or anything like that. You've got your trailing stop in, and it's literally following the price as it goes up. And it'll be like whatever percentage or however far you set it back. Let's say you set it back 7%. Okay. So it's going to trail the price all the way up to wherever it goes. It's going to be 7% behind it the whole way. So my suggestion would be trailing stop. If you can, trailing stop. If not, learn to lock and let ride. Those would be the two greatest suggestions for getting and holding on to your profit. Ooh, okay, we're getting a new candle here, and it looks like it's red. Starting off trying to be a little doji candle there, which is all well and good. Like I said, if it goes against me here, it'll probably hit right here, maybe at the lowest, right about this level right here in between the two, the 50% and the 61.8% retracement levels. Or may go all the way down to the 61.8 and bounce. Like I said, it's going to be kind of hard. It's going to need the bounce to get through the bib consolidation line double up there. It's going to need some momentum. So until it gets that, it's not going to break this level. It's just really, like I've said before in the past videos, really powerful support or resistance when a fib line is laying on top of or right next to a consolidation line. It's going to make it extra hard to get through. Regardless, like I said, extra strong support, extra strong resistance. Right now, it's resistance. Hopefully, we'll be able to bust above that really soon and turn it into support. Last time we busted above it, didn't have enough momentum, enough volume behind it to make it a support level. Like if we could have gotten back up to the swing high, then this most likely would have became instant support and really strong support. And we wouldn't have to think about any type of crash through that level for maybe several days. We've been on like a 11, 12 day. Let me make sure I'm saying this right. I don't want to give any false information out. Okay. Is that the day chart? All right. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. So we've been running in a bullish direction for the last 12 days, basically. And looking at the week chart, oh my gosh. Uh-oh. The week chart is now turned red on us. We now have a red candle on the week and a red candle on the day. Okay, let me take everything back that I've been saying. We are in the midst of a reversal. Yeah. We may crash through 1, 2, 3 fib lines, possibly getting stopped at the 100. Yeah. At the 100% retracement level. Might not make it all the way down to the 100, just like we didn't do here. It's like we were reaching for it, didn't quite make it. So, yeah, since I looked earlier today, when I looked before I started making the recording, everything was green. So this all turned basically bearish, um, probably just when I started recording. Because before that, like I said, I checked earlier. I checked before I started recording. Not right before I started, but like probably about 15, 20 minutes, half an hour, something like that. And this was a green candle then. Okay, we can now see that it's red. This is the same candle that I said back in the other video when it was green that it had been pushed back from the swing high. And at that time, because this right here is the fib chart, and I said that the wick was on the fib line. Well, I should have said on the fib chart, but the chart is actually looking like a line on the weekly candle. And yeah, that's where it was before. So we're seeing a reversal. Let's see what it looks like for the month. If that's still green. For the month, it's still green. And there's the fib chart, and that's the long wick coming from the swing high. Actually, this candle, the body of the candle has actually gotten longer. So for the month, we're still good to go. Actually, we need that to trickle down into the week and back into the day charts, down to the hour. So this will turn back green again. Hmm. Hmm. So this right here would actually be the would actually be the entry point instead of this right here. The bounce off of the consolidation line would be the entry. How much further it's going to go down? Like I said, it could go all the way back down to here where it's been fought off at this level, which would be like 27,187, right around in that range. It gets fought back each time it hits there. It's hit there like multiple times or in that area. In this area right here. This is where we've had the resistance and the reversals happen. So you can expect that pattern to repeat itself should the price break all the way down to here. Yeah, that blue area. So from the bottom of the fib line to, let's tighten that up a little bit, about right there. So yeah, about that far. So we're looking for that area to be a reversal area. When the price breaks the 78.6 retracement level, we're looking for this little blue area here to be a reversal area. Have to move it over here, or just swing it on down. There we go. There's our reversal area through there. This is where it's happened before. Most likely it'll happen again. Remembering the market works in cycles and patterns. Anyway, getting a little long-winded here, and I gotta eat. My alarm went off. Let me cut this right here, right now. You guys have a blessed day, and I will see you on Tuesday. This is the Dark Sage, signing out.